Asian shares plumbed a fresh 11 months through today as fears of a regional conflict in Middle East intensified and as the relentless rise in long-term U.S. yields pressured valuations while supply concerns lifted oil prices further. MSCI's broadest index of Asian Pacific shares outside of Japan skidded 0.8% to a fresh low since November last year, bringing the weekly loss to a sizable 3%. Tokyo's Nikkei fell 1%, while it was down 3.6% for the week. China's blue chip fell 0.4%. Hong Kong Hang Seng Index slumped 1%. U.S. dollar was within a hair's breadth of the closely watched 150-year level. Today, it was up 0.1% against its peers and at 106.34, not too far from 11-month top of 107.34 hit early this month. Initial filings for unemployment benefits dipped last week, indicating that U.S. labor market remains tight and a potential factor in persistent inflation. U.S. Labour Department has reported that weekly jobless claims adjusted to 198,000 for the period ended October 14th. This marked a decline of 13,000 from the previous week and was below the Dow Jones estimate of 210,000. It was the lowest weekly level since January 21st. Claims have been in a general deceleration pattern since the summer, but some economists worry that could change. Markets were awaiting a speech later in the day from Federal Reserve Chair, that's Mr. Jerome Powell, who is expected to provide some guidance on where policymakers head from there. And to China, where the troubled property market is showing little signs of recovery. In the short term, despite a series of government stimulus measures to help revive activities in the sector, which makes up a quarter of the nation's economic outlook. Home buyers wary of the uncertain economic outlook and have remained on the sidelines, while property developers and agents said sales were still soft following a short-lived burst of activities in major cities like Beijing and Shenzhen. China has quickened the pace of policy stimulus in recent weeks amid a deepening debt crisis in the sector, heightened by severe liquidity troubles in China's Evergrande Group and the country Garden. China's new home prices fell for the third straight month in September, down 0.2% from August. A traditionally peak home buying period, official data shows us this report. Crude oil prices extended gain today and were on track to rise for a second week on heightened fears that the Israel-Gaza crisis may spread in the Middle East and disrupt supply from one of the world's top producing regions. U.S. West Texas Intermediate crude rose to sell at $90.29, with an uptick of 1.03%. Brent also experienced an upward price margin of 1.01% to sell at $93.31. Bonnie Light recorded a downward price review of 0.10%, sell at $93.57. And for the OPEC basket, crude dealers are offering $94.46 with an upward price review of 1.95%.